Hey everyone, and welcome. Have you ever wished you could just peek over the shoulder of the biggest players in the financial markets? See their playbook? Well, what if I told you there's a tool that lets you do almost exactly that? Today, we are pulling back the curtain on the Commitment of Traders report. So, to really get why this is such a game changer, let's start with a really specific, really bold claim that was making the rounds back in early March of 2020. Imagine hearing that. Not just a guess, not an opinion, but a statement of fact. The big money, the smart money, is betting against the euro and betting on the US dollar against the Japanese yen. I mean, that sounds like some kind of secret insider info, right? That's the million-dollar question, isn't it? How could anyone possibly know that with any real certainty? Is it a crystal ball? Some secret source in a parking garage? Nope. The answer is actually way more interesting, and believe it or not, it's available to every single one of us. The secret, it turns out, is a weekly data release from the US government. It's called the Commitment of Traders report, or what everyone just calls the COT report. And this is our key to unlocking what the market is really thinking. I want you to think about that phrase, a census of the market. It's perfect, because every single week, this report gives us a snapshot of who is betting which way. This isn't about what one analyst thinks might happen. It's about what thousands of major players are actually doing with their own money. And that's really the crucial point here. We're not talking about small-time retail traders. We're talking about the heavy hitters, the ones who can genuinely move markets. And the COT report breaks them down into a few key groups for us. So the two most important groups you need to know about are the speculators and the hedgers. Speculators, think hedge funds, big banks, they're betting on which way the price is going to go. They want to profit directly from those moves. Now, hedgers, they're different. They're actual businesses, like an airline buying oil futures. They're using the market more like insurance to protect themselves from price changes in the real world. For what we're doing today, we're going to focus on the speculators because they give us the purest read on market direction. And the way they make these bets is by going either long or short. It's pretty straightforward, really. Going long is just a bet that the price will go up, and going short, you guessed it, is a bet that the price is going to go down. So, with that in mind, let's finally look at the actual data. Okay, let's rewind. Remember that claim from March 3rd, 2020? Let's see if the data actually backs it up. We're going to dive right into the COT report from that exact week and see if speculators were really bearish on the euro and bullish on the US dollar versus the yen. All right, here it is, the raw report from that week. And yeah, I know it looks like a super intimidating wall of numbers, but don't worry about it. We're just going to zero in on a couple of key lines to pull the story out of all that data. First stop, let's zoom right in on the euro. We're looking specifically for that non-commercial data, which is going to tell us exactly what those big shot speculators, the hedge funds, were up to. And boom, here's that data visualized. It tells a completely unmistakable story, doesn't it? A massive 65% of all speculator positions were short. They were bets that the euro was going to fall. Only 35% were betting it would rise. The big money was clearly leaning bearish on the euro. And to put a hard number on it, we look at what's called the net position. It's simple, really. Just the longs minus the shorts. For the euro, that number was a staggering negative 184,593 contracts. That is a huge institutionalized bet against the currency. So, part one of our claim, absolutely confirmed. So what about the second part of that claim, that there was a bullish position on the US dollar versus the yen? Well, for that to be true, we'd need to see speculators betting against the Japanese yen. Let's see what the data says. And will you look at that? The data for the Japanese yen tells the exact same story. Speculators were heavily net short, with a whopping 77% of their positions betting on a price drop. And like we just talked about, being bearish on the yen is the same as being bullish on the US dollar against it. So, claim number 2, confirmed. Now, this is where it gets really cool. This report isn't just about currencies. Not at all. Let's zoom out a bit and see what else this thing can tell us about the entire market. You see, the real power of this report is just how broad it is. It's not just for Forex traders. We can use the exact same logic, the same process, to figure out the sentiment in pretty much everything, from gold to oil to even the entire S&P 500 stock index. Okay, now let's put all the pieces together. In that first week of March 2020, the COT report showed us that speculators were massively long gold, a classic safe haven asset. At the very same time, they were heavily short the S&P 500. Now, think about what happened next. Just a few weeks after this report came out, global markets went into a historic crash. This report gave a crystal clear signal of the fear and the defensive moves among the biggest players right before the storm hit. So, we've decoded the report. We've seen what it can do. But what does this all really mean for you? What's the big takeaway from all this data? Well, here is why this all matters. The COT report is an incredibly powerful sentiment gauge. Now, it's not a crystal ball, it's not going to predict the future, but it gives you this invaluable context by showing you the collective belief of the market's biggest and most powerful players. It helps you see if your own ideas are going with the institutional tide or if you're swimming against it. And all this leaves us with one final and pretty fascinating question. When you see this report, and it shows the entire institutional world is crowded onto one side of a trade, is the smart move to just join them? Or is that the exact moment you should be betting against the herd, knowing that the most crowded trades are often the ones that unwind the fastest? Something to think about. Thanks so much for watching.